Okay, welcome back. We've got the pre-open, which is coming up on us, 4 minutes away, and the SGX is still indicating about a 70-75 point downtick. Anuj has hopped across from the next door studios. Anuj, what are you watching, the Nifty or cricket?
Cricket after 1:30, but till then, obviously the market. Prashant, but remember yesterday I pointed out that
The Dow chart.
the Dow chart and the fact that if Dow has to reverse, that was a classical point for Dow reversal. Now, I'm not saying that it's reversed, but I take these very seriously. When the markets reverse from trend lines, you have to take them very seriously. And combine that with the bloodbath that you've seen in the crypto market, clearly there's a bit of a global risk off. And because the market has been so resilient, maybe the market ignores it for a couple of days and still tries the buy on dip trade. But the big question is, has the global market started a correction? The global risk assets, have they started a correction? A sharp correction, that is. If that is the case, then India will also participate in that. And also, you would have noticed that the FI flows dried up yesterday. So, the ETF buying that you've seen, is that also slowing down? That's something to keep an eye on. Let's look at the levels then on the Nifty. For the Nifty rally to resume, you need to now cross 18,300. That's from where you reversed basically yesterday. On the downside, the closing stop loss has to be trailed to 18,050 now. That's where the market's taken support 2 times in the past. So 18,050 becomes your level to watch. As I said, maybe there's a bit of a shakeout of this buy on dips trade, which has played out so beautifully. The other interesting thing to keep an eye on would be the India VIX. There was a sharp surge in the last hour yesterday. We don't talk about it much, but sometimes that also gives you a bit of a lead indicator. If the market has to see buy on dips, Bank Nifty would be the litmus test of that today, especially because there's this Axis block deal which will happen. So that will impact Bank Nifty immediately. After that, we'll see how Axis moves, how SBI moves, how ICICI Bank moves. But that's the stronger of the 2 indices because IT clearly has become very weak once again.
Okay, Anuj, thanks a lot for that. So that's the setup as far as today's trade is concerned. Just waiting for the pre-opening rates to kick in. Ashish Chaturmota is also joining in. He's the Director, Head of Research at JM Financial Services. Ashish, good morning. What do you do with this dip today?
Hi, good morning. So I think, see, broadly markets, are in a very strong uptrend, and today, we are going to witness some kind of selling pressure ahead of, the SGX Nifty. But I think around 18,000 to 17,950 is an area where a lot of, buying interest would emerge in the market because that's an area where we have seen very strong put writing. And also, if you look at the 13-day exponential moving averages around 17,940 zone. So I think 18,000 is going to act as an important support zone. And if you look at the banking index, we are seeing a very strong, strength coming from the entire banking and specifically the PSU banks. So obviously, Bank Nifty is going to see a lot of, buying interest on dips, and that's where I think the market could, witness some kind of support around 18,000. And as far as, if you look at even the put call ratio and other indicators, we have not seen very strong, sell signals. So except for the fact that we are witnessing some global concerns, I think overall the market still looks like buy on dips. And the top picks within this would be LNT, which has been consolidating for a while for last 5-7 trading sessions and is looking very strong within the entire capital goods space. So could be initiated as a buy, keep 1980 as a trading stop loss. 2100 would be my short-term target in Larsen and Toubro. ICICI Bank, obviously, is consolidating near its all-time high and has seen a very strong OI build-up. So here one can initiate a long, keep 895 as a trading stop loss. On upside, 940 would be my short to medium term target in ICICI Bank. The only sell call which I have is Jubilant Food. This stock has given a massive breakdown post its results, and we have seen very strong volume activity into the stock. So this stock I think has lost its momentum, and one can see a downside towards 535 to 530 trajectory. Keep 575 as a trading stop loss for going short into Jubilant Food.
All right, Ashish, thanks very much for those trades and for that view as well. The pre-open is at the bottom of the screen, but it's unlikely to be that, at least doesn't look like it's going to be as bad. 300 points on the Nifty. It'll settle in the next 5 or 6 minutes or so, and then we'll come back and revisit these rates. Rajesh Bhatia is still waiting by. Rajesh, you are, because of the nature of the fund, the long short fund, I'm assuming you sort of play momentum both on the upside, the downside, take quick trades. What have you done without being stock specific? Because the outsized move in the last 1 month has come in the PSU bank space. Have you played that? And what else?
Yeah, certainly we are playing the PSU bank theme. We think that valuations are reasonably attractive, given the fact that NIM margins are kind of expanding for them, at least in the short term, because the asset book is getting repriced faster than the liability book, and the fact that a lot of the NPA cycle and therefore credit costs is behind them. Even if new credit costs have to be incurred, it'll take probably a few years for that to kind of pan out. And therefore, given the strong liability franchises, these companies and these banks basically report good return on equities, and therefore some of them which are trading far below book or below book become very attractive trades. So certainly, I think we are playing the PSU bank theme. I see value also in IT emerging, but there is no short-term catalyst. And that's really a challenge. And given the fact that we are still looking at recessionary conditions globally, I think you have to be a little more cautious as you go into that trade. But for a longer period of time, my sense is IT is coming into some sort of a value zone. And then there are select life insurance companies, telecom companies, and very select auto companies. That's really our long book, as you move forward.
Okay, all right. Rajesh, we'll leave it at that. Thanks a lot for joining in. Have a great day. Doesn't look like the bulls are going to have a great day today. The Nifty is down about 197 points in pre-opening. Tata Motors is your big loser, down about 4% post a weak set of numbers, and the company cutting its guidance for JLR. You also have Nykaa, which is under pressure now, so do keep an eye out on that. I think it's a 6% slam dunk on Nykaa in pre-opening as the pre-IPO lock-in period ends. So we'll track that one closely as well. But Suven Pharma is the other one. Posted a weak set of earnings. The revenue has declined both year over year and sequentially because of pressure in the CDMO business. The company's margin has also contracted this quarter. And there are indications that perhaps the company has cut its guidance as well. Let's confirm with the management. We have Venkat Jasti, who's the MD of Suven Pharma, who joins in. Mr. Jasti, good morning. Thanks for joining in. Earlier, you had guided for a 10 to 15% growth for the business. But now some analyst reports indicate that you're looking at a flat to positive growth for FY23. Should we understand that you have cut your guidance for revenues for the full year because of the challenges?
No. I think there is a misunderstanding. I have given a guidance of 10 to 15% of the CRAMS business. But overall, last time when I spoke after the quarter one results, I have said it will be a flat to minus kind of thing on the overall revenue front. But that is true that because of the visibility we have, and that it shows up in our quarter two results. But at the same time, now we are on the total revenue, we are saying we are going to match the last year's, if not surpass also, because the traction is much better now compared to 3 months ago. I think how much that will ramp up to the next level, we don't know. But things are moving well, and there are, the shifting of the shipments of some of the CRAMS projects that also makes that revenue less. But overall, at the end of the year, we would like to, because...
Sorry, so you said, just to confirm, you said flat to negative for FY23 is the overall growth that you're looking at, and 10 to 15% growth is for CRAMS.
Yes, that's what we have guided last time. But now we are saying the flat growth will be not there. It will be a little bit more than what we have guided last time.
Okay.
And that will be there.
Okay. All right. Mr. Jasti, we'll get back to your operational performance, but I wanted you to clarify. A lot of reports are suggesting the company is on the block. Some PEs, Blackstone, Advent International, they are in talks to buy out the company. Please clarify, or there's no truth whatsoever. You could give us, either of the two replies.
Well, this is happening since 2019 when the demerger has taken place, and we have been telling them if anything happens, we will be the first one to know. As a forward-looking company, we keep exploring what are the strategic opportunities that comes in our way.
Okay.
And every other time something comes in, But if it matches our requirement or not, is it a strategic in nature or
So
not?
Mr. Jasti, Mr. Jasti, so
We have given a clarification on this already this week
yeah.
to the stock exchanges, saying that there is nothing going on at this time other than we are talking to the people, whoever walks into those steps, and listening to them, whatever they are offering, and if it meets our requirement, then we'll go forward.
So
as of now,
Mr. Jasti, we got that clarification, but we don't talk to you. We didn't speak to you last week. That's why I asked you. And you're saying there are. So are you telling us that there are some offers that have come already? Some people have already approached you, asking you for a buyout. Is that correct?
It is not the offer. It is the only approach. People are approaching us and giving their pitches and what kind of a collaborations they are talking, what kind of strategic nature it is, and all those things. So we have to talk to them and see if it is suits our requirement for the long-term safety. I mean, what do you call this? Stakeholder value creation and all that stuff. So that's what we are trying to do. But these are ever happening because now more people are coming. I think people are expecting that something is happening.
Mr. Jasti, but have you put out any feelers? And that's why people are coming.
No way. I have not put up any feelers.
So why do you think that you are getting all these offers or approaches, as you said?
I think M&A is and things are happening in the healthcare field very much, and I think they are looking at 3 or 4 companies in Hyderabad. So they are making rounds to all these 3 or 4 companies in Hyderabad, and I am one of them.
Okay,
I have no idea what they are coming.
Sure. Since you are in talks at the moment and there are people interested, what are you more veering towards? Is it more a strategic investor that you'll be looking at? Is it a financial investor? And in terms of a timeline, what are you looking at?
I don't know. It's not the talk. It is only listening whenever they're coming and pitching. And if somebody comes in, I don't say, don't come here. No, they're coming and something looks good, then we'll go forward. I think, yeah.
Mr. Jasti, you have been offered by PEs, financial investors, or is there a another pharma name that has given you an offer? If you could clarify on that.
It's not an offer again. It is only
approach. People are come to meet you and approach you, and
it's both companies and the what do you call the PE funds.
Okay, all right. So we have more or less understood that as of now there is no offer, but there have been some kind of approach and some kind of inquiries. Give us a couple of quick details then. The CDMO revenue that was under pressure, it was down to around 110 crores odd. What should be the quarterly run rate from here?
No. At the end of the year, last year the CDMO run rate is because of the COVID. There is an additional 120 crores revenue is there, and but we'll take that out because that is a one-off kind of things, and we'll make the at the end of the year the CDMO revenue will be 10 to 15% growth based on the 2020, and total revenue will be, we thought it will be flat to minus, but we are saying now based on the visibility, it will be a little bit better than last year.
Got that. And on the margins, if you can just tell us, when do you expect margins to recover back to over 40%?
Oh, they're at 40% now, and they will still, and we keep that guidance as is. At the end of the year, you will have that plus 40% EBITDA margins.
Okay. All right. We will leave it at that. Thanks a lot for joining us, Mr. Jasti. Appreciate your thoughts on fielding all of our questions. Well, that's Suven Pharma. They're saying that there is definitely interest in the company by players across the board. PE firms, other companies have approached them for a takeover, but nothing is finalized just yet. But let's take a quick look at the pre-opening rates, settled about 112 points lower. Axis Bank and Tata Motors are your top losers at the moment. Sudarshan Sukhani is still with us. Sudarshan, what's the big call at 9:10?
Well, I would avoid that index and not buy this dip. Wait for tomorrow. UBL is a buy with a stop under 1640.
Okay, all right. Sudarshan got that. Mitesh, what about you? What's your 9:10 call?
Yeah, I will go with a sell call. There will be a sell on Jubilant Food with a stop at 577 for targets of 540.
Got it. Okay, all right. Thanks, gentlemen. We'll come back to you all in just a bit to take a fresh call. For the time being, though, the Nifty has started off with a cut. I mean, the indications are 110-point downtick. That's more or less in line with what the SGX Nifty was suggesting. But Sonia, the biggest loser on the Nifty is Tata Motors. Clearly, the street didn't like those numbers.
Absolutely. And, just a couple of brokerage views I want to put on board. JP Morgan has cut their target price on Tata Motors to 410 from 450 earlier. They've also cut the FY23 to FY25 EBITDA by 3 to 9% for Tata Motors. They are saying that the India business has disappointed in Q2 and the management has cut its guidance both for volumes as well as free cash flow, which is a big negative coming through. CLSA, on the other hand, has raised their target price to 491. They're one of the few that are still optimistic post the numbers. They say JLR has performed better than the India business in Q2. But there are 2 points that really worry me, if you look at the numbers. One is that the debt of the company has risen quite a bit, stands at almost 60,000 crores right now because of working capital deterioration. And the other is that JLR has gone ahead and lowered its guidance for FY23. They are saying that at best EBIT margins will now be positive. Earlier they had guided for a 5% EBIT margin. They are also expecting only a free cash flow break-even in FY23 versus a £1 billion free cash flow guidance earlier. So cutting of the guidance is something that the street doesn't like at all. But let's go across to Mangalam. He's tracking Pidilite this morning. Mangalam, over to you.
Well, Pidilite numbers are weaker than expectations, and that's primarily on account of higher raw material costs, which have hurt the company's EBITDA as well as the net profit. If you just take a look at their gross margin as well, that has been lower both quarter-on-quarter as well as year-on-year, and is one of the lowest that we've seen in the last many years itself. As far as the numbers are concerned, revenues just above 3,000 crores as against street expectations of under 3,100 odd crores. Margins have been a big miss, 16.6% versus expectations of 17.5%. Remember, the company's overall long-term guided band is 20 to 24%, so there should be some doing for the company to go ahead and scale back to those margins, and as a result of which the net profit declined year-on-year and has been much lower than the street expectations as well. Consumer business volume growth has just been 1.2%. The street was working with low single digits, but this is below that as well, and overall volumes have grown in marginal positive terrain, so that would be assuming sub 1% itself. Now, the gross margins at 41% is the lowest that we've seen in the last many years, if not the lowest ever. And to that, the company said the input costs this time around have been at all-time high. And while margins have been impacted by raw material inflation, high price inventory and volatile forex too has impacted them. For demand, urban has grown faster than rural, so this is a trend we need to monitor going forward. And softening of commodity costs as well as their key material, raw material, which is VAM, has seen some decline. So the second half of this year will be extremely crucial. So management commentary is something that we'll be watching out for. On the back of that, brokerages with the limited numbers that we have so far have negative views on the stock. Macquarie has an underperform call with a target price of 22.50, whereas Goldman Sachs too has a sell call, the target price at 22.50 itself.
Okay, all right. And in fact, we'll be discussing the second quarter numbers and the earnings outlook with Mr. Bharat Puri, the Managing Director of Pidilite Industries, at 12:30 p.m. later today. Stay tuned for that.
Okay, we just have, I think, less than a minute before the markets open for the day. Looks like it's going to be a weak opening. Do keep your eye out on Axis Bank. It is the top Nifty loser at the moment, down almost about 3.5% in pre-opening. While Tata Motors, Infosys, TCS, it's an across-the-board sell-off that we're preparing ourselves for. Sensex down about 500 odd points. Just 20 seconds left. Mitesh, a quick comment from you on Axis Bank.
Disclaimer here, I personally hold the stock in my portfolio. But that about, I think the stock, after that result bump up, had a big gap up. I think it's going back to the gap area to test it out. I think around 835, 840 is a good support zone. So maybe around those levels you go to venture a buy for trading.
Okay, thanks a lot for that. Sorry to rush you there. The first tick on the index is down about 0.5%. Not as bad as what the global markets have done for themselves overnight. Nifty down about 65 odd points, Sensex down 210 points. Advanced decline ratio split right down the middle, but veering towards the declining side. Tata Motors is your big loser, down almost about 4 odd percent, followed by Axis Bank, which is down about 3 odd percent. Then you have IT stocks that are coming under pressure now. So Tech Mahindra, Infosys are your big losers, down about 1 to 2 odd percent. And a couple of these FMCG names, Britannia, ITC. So it's a secular run on the downside today for the markets, at least at the start of trade. Eicher Motors comes out with its numbers later today, down about 0.5 odd percent. Hero MotoCorp also trending into the red line. And something like an M&M that reports numbers tomorrow is down in the red as well. What's trending in the green? Cipla is up about 0.8%. Coal India is seeing a little bit of follow-on buying post yesterday, so up about 0.5%. HUL, Bharti Airtel, Nestle, Kotak Mahindra Bank and HDFC Life are a couple of other stocks that are trending in the green. But suffice to say, it is a weak opening, but not as bad as what one would have expected given the kind of global sell-off that we saw. And Tata Motors is your big loser now. Volumes also piling up on that, down about 5% there. But how's the mid-cap end?
Well, a lot of stocks actually, Sonia, are reacting to numbers. So let's start off with a few misses actually. Pidilite, well, that stock is lowered in trade. That one, in fact, Mangalam just told us that those numbers weren't too impressive. So, that's down closer to 1%. Pyramid Enterprises, that's pulled back closer around 7%. So that's clearly not being read as a good set of numbers. Deepak Nitrite, Sonal warned us that those numbers weren't too great. Well, that one, in fact, has opened up with a sharp downtick. It's down closer around 8% or thereabouts. You have Star Health as well that started a bit on the back foot. And Nykaa, because of that supply concerns, well, that one as well under some pressure. On the flip side, let's pull up Lupin. Let's see how that one's opened up. Ekta said those numbers were better. And just take a look at that. In a weak market, Lupin is up close to around 6% odd. So that's clearly the stock of the morning. Big move is what we're seeing out there. Petronet LNG as well, that's the other one that's reacting to its numbers, up close to 100% in otherwise weak market. And Narayan Health as well, that one as well had started off in the green. So a lot of companies reacting to its numbers, split down the middle out there. But the ones that are reacting on the downside, well, we're seeing some sharp reactions out there. Prashant.
Absolutely. I mean, 100 points lower is what you have on the Nifty. So this is lower, absolutely clearly lower start. And for the first time, I think, in many days, right at the word go, market breadth is negative. So we've got more, it's almost 2:1 in favor of declines. It's too early in the day to make any conclusions based off it. But the fact is that, declines to advances is 2:1 right as we start. A bunch of other names. Pyramid Enterprises is down 8%. Numbers were, of course, a disappointment. This is the financial services arm. After, of course, the pharma business got listed separately. Ramco, which sold off aggressively yesterday, is down another 9%. So 640 on Ramco. Balrampur Chini, and you'll hear from the management in a bit from now on the channel, that is starting about, it's actually flat. It started low, but I think it's picked up from there. Gujarat Alkali is down about 7%, 828 on Gujarat Alkali. And there is Aurobindo Pharma, which is starting down about 2%. We'll get to this stock. There's some news flow around this, but more in a bit. 531. Prince Pipe, again, not sort of a recent listing, but not been around that long as well. But 7.5% lower on Prince Pipe on decent sized volumes. Oberoi Realty, Godrej Property sold off yesterday. Oberoi Realty is down about 5% as well. So that's actually a lot happening on the downside, apart from, of course, Tata Motors, etc., which we've already highlighted. On the upside, Lupin is up a full 7%. We highlighted, started higher, it's staying there. And Narayana Hrudayalaya is the other one, which has got a big pop of 7%. Again, reacting to numbers, Ekta said, the numbers were pretty decent so from that one. So that's the broader lay of the land. As I said, market breadth, more losers than gainers. But that gap is already starting to close. The Nifty is down about 95 odd points. Our market master of the day is Manishi Ray Chaudhary. He's Asian equity strategist, equity cash Asia Pacific at BNP Paribas, and he's right here with us in the studio. So Manishi, great to have you with us here. Thank you very much.
Of course. It's an amazing feeling. I'm back in India after almost 3 years.
Oh, wow.
3 years, yes.
Wow.
Truly. It's almost,
how are you feeling?
This not being able to come back, it feels like getting locked out from your own home. Yes. And that's why it's such an amazing feeling to be back here.
And glad that you could make it to the studios as well. And I hope that this is the first of many trips home. Manishi, how are things looking to you? And let's just start with earnings, because we are getting to the close of this particular earnings season. Are earnings momentum fading out a little bit? Is that a sense you get?
I think, the Indian earnings season, from what I gather, has been a mixed affair. You had pretty decent numbers from some of the private sector banks early on, a couple of the top-rung IT service companies as well. But then, when you come down to the second tier, there has been a few disappointments, and possibly more importantly, you have had some disappointing guidance as well, about the fourth quarter and about the rest of the year. So, and actually it's not too different from what you hear in the rest of the region, possibly marginally better, I would say, compared to what you hear in North Asia in particular. The markets like Korea or Taiwan, which are export-heavy, tech hardware-heavy, there the stock collapse has actually been driven by earnings collapse, which actually came earlier. The earnings estimate declines in those markets have been in the region of about 18 to 23%, if you look at the last 1 year. For India, it's been in the range of 6 to 8%, which is not such bad news in the context of the world that we are living in.
Okay, well, I just want to mention a couple of stocks. Cipla is actually gaining a bit of ground right now. It's one of the big movers at the moment. Volumes are also picking up over there, about 1.5 to 2% higher on Cipla. And some more stocks that are actually bucking the trend this morning. Lupin is really a big mover now, 8% higher on Lupin. So don't lose sight of that. Big volumes on Lupin as well. Narayana Health is up about 6% and Nykaa making a bit of a comeback, up about 4% there. Manishi, good to have you back. And how different is it now in India compared to what you're seeing globally? Because there's clearly a global turmoil, whichever part of the world you look at. And India has been standing tall. But what do you see as the pockets of outperformance?
India is, in a sense, a stable island in a stormy sea. You have these severe earnings downgrades in the rest of the world, and particularly in the, the relatively developed part of Asia, North Asia. India's advantage, and these are nothing new, it's the largely domestic economy. It's not so linked to the kind of demand retrenchment that we are seeing in the developed markets, except possibly the concern that's engulfing the IT service sector at this point of time. And, of course, unlike many other large markets in Asia, there has not been any policy headwind to the private sector businesses, and I'm referring to China here. So when one puts all this together, the conclusion is that India is relatively safe compared to, and that's getting reflected in the share price performances. I have a chart hidden somewhere. You can plot it if you have like a Bloomberg terminal. You just plot MSCI India, MSCI China, denominated in US dollars right from GFC. These two markets used to move in lockstep, Investors had very little to choose between them. But from early 2021, China collapsed. India has been relatively stable during that period. And this would be true if you plot India against, let's say, MSCI Asia ex Japan as well. So this has actually been the story of India. Simultaneously, we have seen the benchmark weight of India in MSCI Asia ex Japan go from 10% to about 18 to 19% over the past 2 years. That forces the long-only real money investors to allocate more and more to that market.
Well, Manishi, on the headline index itself, as you said, we've been a big outperformer. Valuation-wise, we're not cheap any longer. Do you think we're set for a time-wise correction? Or you're not? And will you rule out a price-wise correction? If there is a price-wise correction, how low can we go according to you?
Let me dwell on this, this point of valuation that you made, because this is important and it comes up repeatedly in our discussions. If you look at price to earnings, 12-month forward price to earnings of India, MSCI India, let's say, or one-year price to book, these are actually not really egregiously expensive today. One-year forward price to book is a little more than 3 times. Price earnings is possibly about 19 to 19.5. The last 25 years average P multiple was about 18.5. I think the price to book multiple was about 2.75 or so. So these are slightly higher than average, maybe slightly less than 1 standard deviation below. What looks egregious is actually the relative valuation. If you plot India relative to MSCI Asia ex Japan, it's more than 2 standard deviations higher. And that's a consequence of the rest of Asia, particularly the large North Asian markets, being pulled down. So look at some of the other banks, private sector banks, which used to trade at 4 times price to book. They're currently about 2.7, 2.8 or so. So I think, the point that you make about time correction, that might happen, especially if we see a turnaround in North Asia, if we see China outperforming, for example. As far as a real price correction is concerned, well, it's difficult to draw a conclusion about the short term. It might happen because outflows from emerging markets are still continuing and likely to continue, at least till the first quarter. But it may not be severe.
Valuations by themselves have really never caused a big correction, price damage in that sense. Right? You need a trigger, you need something to change at the margin.
Absolutely.
And what has helped here massively is this constant, steady stream of domestic inflow. 14,000 crores in SIPs. I think 8-9 months back, there used to be 7,000-8,000 crores, right? And that is staying steady for now. So irrespective of what happens, and I think this is a point which has made people sort of sit up and take notice. Whatever you throw, but you got this constant stream of domestic inflow. The market stays where it is.
In fact, very valid point you make there. think of the period from October 2021 to about July 22. 33.4 billion US dollars were drawn out, taken out of India. The market still stayed relatively stable. And that was, it's basically the domestic flows that were bulwark against those FI outflows. Why did this happen? Not only because there was no alternative investment avenue at that point of time, the interest rates were low, but also because the retail investor is gradually coming back into an asset class into which they had not invested for many years. And, in the RBI annual report, this data comes. If you look at the household financial investments, go back to the early to mid-90s. Householders used to invest about 15 to 20% of their financial savings those days into equities. It came down to zero by the early 2000s. Today, it's at about 5, 6, 7%. If we think of those earlier days, it still has the potential to triple from the present levels. And think of the quantum that we're talking about.
In terms of individual sectors, right, one thing that we're noticing is that a lot of companies that have global exposure continue to be under pressure. So we were talking to Galaxy Surfactants, they've sort of cut down their guidance. Right. Jaguar Land Rover, Tata Motors has cut their guidance. So what do you do here? Do you, is it prudent to keep away from these global facing companies, especially in the auto ancillary sector, or do you look for opportunities to buy?
Right. Now, that's, it's something that we debate ourselves, and we have actually taken the course of action in the India silo of our model portfolio to move slightly away from those global linkages for now. And we are clearly focusing more on the domestic part of the portfolio. So you mentioned some of the auto ancillaries. There again, we do have auto companies, but these are clearly the domestic champions, the four-wheeler market leaders who have pricing power and huge distributions, etc. When you talk about global linkages, one sector that obviously comes to mind is IT. And as we know that there has been a degree of sort of investor pessimism about that. But here again, if you look at the order flows, they have been strong and long duration orders have been coming through, which gives some kind of a revenue visibility to the top rung frontline companies.
All right, Manish, we'll leave it there. Thank you very much. Great that you could drop by to our studios. And as I said earlier, I hope this is the first of many visits back home to India.
I hope so too.
Thank you very much.
Are you here for?
I'm here for about 10 days or so. I'm finally flying back to Hong Kong on 21st night. Okay. We have a few events, in our bank.
And it has been pretty severe in Hong Kong, right, over the last many years in terms of COVID restrictions.
True. And, those restrictions still continue even though they have been eased a bit. And that's why people like us, we are now able to, there's no quarantine. But there's still that self-monitoring. We have to test ourselves every day, load that test report on a website. We have to do that when we get back. So.
Okay. All right, Manishi, good to have you in the studio and have a pleasant stay here in India. Wishing you well.
Thank you. Thank you very much.
Well, let's get to our next corporate then that's joining us, Balrampur Chini. Well, the numbers were a little bit weakish owing to the sugar segment. That's what led the losses in the past quarter. To understand what's going on out there and what's the outlook from a year on, we're joined by Mr. Pramod Patwari, the CFO of the company. Hi, sir. Morning. Thanks so much for joining in. Well, let's focus on the sugar segment itself. What are the sugar prices trading at now? What's the outlook for the year? I believe you're sitting on around 12 lakh quintals at a price of around 35 rupees odd. So give us an outlook on this front.
Yeah, correct. So we are sitting on an inventory of around 12 lakh quintals, which are valued at 34.8 paisa per kg. And currently, we are selling sugar at around 37 rupees per kg.
Okay.
As far as the outlook for the sugar prices are concerned, we believe that it will be a function of available inventory into the system. Inventories are depleting on the basis of robust export as well as the significant diversion of sugar into ethanol.
But there is still a surplus, Mr. Patwari, sorry. There is still what's the situation there? How far is that depletion going to happen? By when? And what does that mean for sales, sugar sales?
Yeah, as far as the availability of sugar into the country is concerned, next year production estimates are around 40 to 41 million ton. And after taking into account the 4.5 million ton of diversion into ethanol, availability will be around 36.5. Against that, demand will be around 27.5 to 28 million ton. So we will be left with around 8 million ton of surplus sugar, which needs to be exported. Government has already announced as a first tranche for export of 6 million ton of sugar from the country. And they will continue to monitor the production progress, and thereupon at relevant point in time, they may come out with another tranche of export. They have very categorically and clearly said that they are comfortable with 6 million ton of inventory as a closing stock on 30th of September.
Okay, so currently from this sugar price, you said it's currently 37 rupees a kg. How much do you think it can move up to over the next, say, quarter or two?
See, it will be very difficult to give you a quarter-wise production projection, but as the production season will be in full swing in next 15 days, I think it is going to remain range-bound.
Okay, all right. Mr. Patwari, let's talk about the distillery business. You know, as of the last year, it contributed close to around 19% odd of your revenues. Profitability is much more. Now, your aim is to take it to around 35%, and you have commissioned, a couple of units, and your capacity itself is going to go double from here. Give us the roadmap. By when do you go to this 35% revenue contribution from the distillery segment? And given that you have incurred some capex, how will your balance sheet look at peak levels?
Okay. So at peak level, we are expecting a total turnover of around 6,000 crores. As rightly said, we are looking at a distillery revenue of 35% within that 6,000 crores. So our distilleries are going to commission by this month, and maybe one of the distillery will commission by first week of December. So we will get full 4 months as far as FY23 is concerned of 35 crores of annual capacity for our operation. FY24, you should have a full 35 crores of production and sales as far as the distillation is concerned.
And how much would that take your business to? Distilleries currently is less than 20% of your revenues. How much can you grow it to by the end of FY24?
FY24, we are looking at 2,000 crores of turnover coming from distilleries.
So 2,000 crores of turnover. But what about on the EBIT side? Currently, I think it contributes about 60% of your EBIT. How much can you grow that by?
See, again, Sonia, this segment-wise profitability and contribution will be a function of transfer pricing of input materials. This is what we have said in the past also. But if the prices remain same, I mean, raw material prices remain same as far as the transfer from one division to another division is concerned, then there is no reason to believe that profitability from ethanol division will come down from here on. Of course, the juice prices are not that remunerative. So on juice-based ethanol, we will have a slightly lower profitability.
Right. In the next sugar season, what would, for the company, for Balrampur, what would exports look like?
So for 2023, we have been given a quota of 1.98 lakh tons of sugar export. Out of that, we have already contracted 1.4 million ton, 1.4 lakh ton for physical exports.
Okay. All right. Sir, we'll leave it at that. Thanks a lot for joining in. A bit of a scratchy line over there. So we'll try and just wrap up the conversation.
So I just wanted to point out, ED sources, they are indicating that Mr. Reddy of Oro Pharma and Mr. Babu of Pernod Ricard, they have been arrested on money laundering charges, and that's why Oro Pharma should be in focus, because I believe that Mr. Reddy, he's the whole-time director of Oro Pharma, I think, and that was flashing for you on the screen, and that explains why the stock has moved a little bit lower. We'll try to get you further details, but that was the flash that was up, so just thought we'll point that out for our viewers.
Okay, the stock is reacting to that, down almost about 3% there. We'll try and get you more details, but in the meantime, we also have PI Industries, which is in focus. Remember, the company posted a very good set of numbers, but the other good set of numbers came in from GSFC. It was the fertilizer segment which has seen the EBIT surge 4 times versus last year, despite higher gas prices and erratic rains. The industrial segment, however, has reported a loss this time around. VD Nanavati, who's the Executive Director and CFO at GSFC, joins us now to talk about that. Sir, thanks a lot for joining in. It was the fertilizer segment that really led to that big growth this time around. So I'll talk about that in a bit. But first, in the industrial segment, the losses continue there on the EBIT front. Can you tell us what were the caprolactam benzene spreads, and do you think this EBIT loss is something that you'll have to see in the industrial segment in the second half of the year as well?
Yeah, so the Capro-benzene spread went down below $1,000, which is a benchmark for any profitability in industrial product segment. We saw a lot of volatility in the crude prices. So benzene being a crude derivative, it affected the benzene price, while the Capro price did not rise in tandem. So we had this spread coming down and overall segment showing the loss. Still going forward also, we see some pressure on the finished product prices in this industrial product segment. So there will be borderline case, so to say, in next 6 months.
So what should be the new spread we should work with, Mr. Nanavati? Earlier you were talking about, the spreads could be maintained at around $1,000. Do you want to revise that downwards?
As of now, it is a little lower, maybe $850 to $900.
Okay. And for the second half of the year, sir, what should it be?
Yeah, it should be around this range only. So on a yearly basis, it won't catch up with $1,000. That is what.
So the new guidance should be around $950 dollars, or will it be even lower than that?
Around 900 only, I would say.
Okay.
Okay. The fertilizer segment over there, the EBIT has gone up substantially. I mean, it's been a 4 times jump. So let's talk about that. This is despite higher gas prices, erratic rains, etc. Can you tell us what kind of growth do you see in the fertilizer segment? What are the trends looking like over the next couple of quarters?
Yeah, so government has come out with the subsidy for the second half of the year, where most of the subsidy has been maintained with some 3% or so cutting the subsidy in line with some downward fall trend in the input prices. So with that clarity in mind and MRP of the various fertilizers remaining more or less the same, so we continue to see good revenue and profit in the fertilizer segment for second half also. And overall basis, we, as we said earlier, we hope to cross 10,000 crore mark in turnover.
Right. Mr. Nanavati, what about gas supplies? Last time you had indicated that there is an issue with regards to adequate supply of gas from GAIL. Has that eased out and what are prices that you're paying now?
No, some constraints are there, but last time also I said there is no production loss because of gas supply constraints. So it is available at a little higher price compared to normal price. But as far as urea is concerned, gas is a pass-through in form of a subsidy. So there we don't have any problem. And recently government has also provided very good subsidy rate for the nitrogen, which is mainly coming out of processing natural gas.
Okay.
So, and with our very long experience in gas management, we have been able to contract very good long-term contract for gas supplies. So that is reflected in fertilizer margin, where most of the gas is used.
Okay, all right. Mr. Nanavati, Chambal Fertilizers, they had spoken about some delay in the subsidy payments. If you could tell us what is your outstanding subsidy and are you getting your payments on time?
No, there is some delay in subsidy. Of course, PNK subsidy has been paid, say, of at least middle of September, whatever post sale has been done. All the subsidy till middle of September has been paid in PNK fertilizer. Urea, because gas prices are rising very fast, so the revised subsidy determination and payment is taking some time. So there is some pain in urea subsidy particularly, not in PNK.
What is the outstanding amount, sir? I missed that. What is the total outstanding amount?
Yeah, total outstanding is around 2,000 crores.
Okay.
Okay, 2,000 crores. Just one final question on these new packaging norms. I don't know if it impacts your business in a very big way, but this one nation, one fertilizer, the packaging norms, would that impact volumes at all?
Oh, we don't think we will have any problem with the volume, but there will be more marketing efforts will be required on how to differentiate your products with similar looking packaging bags, which farmers may not be able to clearly differentiate. So we'll have to make some efforts on that line, but I don't think any effect on volume will be there.
All right, Mr. Nanavati, thank you very much. Great speaking with you. Appreciate you joining in with that perspective and a bit of outlook as well. Fertilizer subsidy, I mean, so the second company telling us after Chambal that it's a bit of an issue. Outstanding subsidies at 2,000 crores. Overall industry subsidy for fertilizers is at an all-time high. It's expected to be at an all-time high, largely because of a function of global fertilizer prices, which have gone through the roof, which had gone through the roof, have come off a little bit lately. We'll take a very quick break here. Next up, we're going to be speaking with the management of PI Industries. So that's a solid performance. The stock went up quite a bit yesterday, and Westlife Development is also going to be talking about their second quarter earnings performance on the other side. Stay with us.
Co-powered by